Hi everyone, welcome to another episode of The Good Life. I'm here today in the Haven Life offices with Matt Wolf from Haven.
Hi.
Thanks for joining me.
Yeah, of course. I've been an actuary for over a decade now, I guess a little over a decade. I previously worked at a couple large insurance carriers, mostly doing life product development, pricing work. And what was really nice about my work in the previous companies was I got full exposure to the entire product development process from the very beginning of like kind of ideating and designing a product, all the way through the through pricing the product and actually implementing the product.
Sure.
And that background has kind of suited me well for coming into like an insurtech company where we don't quite have all of that built out yet and we're figuring things out.
Yeah. So I know that certainly with the first time we met, which was probably a while ago now, it had appeared that you had built a lot of your own personal tools and ways of doing things because perhaps the software wasn't out there, and I certainly found your approach to be, I guess, on the more innovative end of what you were trying to do, which is you should absolutely take as a compliment.
Thank you, I appreciate that.
So, which kind of leads me on to my question, I guess. What really excites you, considering the massive buzz there is around insurtech, but more specifically around some of the innovation that's going on in actuarial software and processes?
Sure. So I think one of the things that excited me to come here, to Haven Life to begin with, was the ability to innovate and build from scratch, right? You're not stuck with the legacy way of doing things, and you could kind of start and build things from scratch and do it kind of the better way, or whatever the preferred way. And so you talk about some of the stuff that I would like build off on my own, but I think what it's about is taking advantage of the technology that's out there today and being able to drive innovation that's going to benefit the customer at the end of the day. So for me, I think there's a couple big areas that we can drive innovation in actuarial processes that are going to improve the situation for the customer at the end of the day. And the first one is personalization. So think about the end customer, right? Like nowadays, you start to hear more about how we can use data to underwrite directly for the customer. But underwriting is only so good if you can't price for that same level of specificity. So as we're able to use technology to better underwrite and kind of identify, this is an individual, you have unique characteristics to you, we're going to underwrite to you, and then also we then take it the next level deeper and say, and therefore people that are much more like you, this is how much you should pay. This is the fair price for your level of risk. Today, I think we're bound, in large part because of the underwriting, in large part because of our actuarial processes, to we can't really quite get to that level of personalization that maybe we would be able to sometime in the future.
Before you go on to number two, I want to ask you a question about number one. So, and maybe this is a topic for another day because it could be quite lengthy. But at what point does personalization become anti-selective?
Sure. I think there's an interesting challenge in insurance with personalization, because there's two ways you can deal with insurance, right? One type of insurance you can have, I mean, there's actually way more than two, but in this context, there's two types, right? So one type of insurance you can have where you're insuring between people, right? So I'm not likely to have this event occur. You might have this event occur, or we both have a similar probability, let's say, right? Car accident. So this year, probably between the two of us, we're not going to both have car accidents this year, but we're both going to pay premiums on our cars. So actually, most people in New York don't have a car, but let's assume that they do.
I've got a van.
All right. So that's insurance between people. I'm paying a premium, and I may not use it, and you will. Another type of insurance is insuring over time, which is that it is still between people, but everyone can have the same risk. What I'm really saying is I don't know when that's going to happen, right? So you could take the same situation, you could say, I'm going to get into a car accident eventually. It's probably going to happen, whether it's my fault or not. I'm likely to get into a car accident. So it's a question of when am I going to get into a car accident? Is it going to be this year or in a future year? In both of those situations, you're dependent on getting a large enough group of people who have similar characteristics. But in the first one, we don't have to have the same level of risk. So when I'm saying I'm going to insure between you and me, I could say I might be twice as likely to get into a car accident, but we both pay the same premium.
Okay.
And we just grouped ourselves together.
Sure.
In the second one, I'm sort of making an assumption that you and I have the exact same level of risk because I'm just really insuring over time.
Yeah.
So it's two concepts of thinking of the exact same type of insurance. To me, the more personalized you get, the closer you get to that second situation where I'm really just insuring you over time. So there's always a risk of anti-selection,
Yeah.
but the more personalized you get, the closer it is to that person's level of risk, and the more people that you can find like that person,
Yeah.
the less I think the opportunity that you have someone who is a higher risk in that same pool with the person who's lower risk.
Sure. So just so I've got this straight in my own mind, so when you talk about personalization in that second example, what you then start to do is group the people with those same characteristics and risk profile together.
Yeah.
And you have them in a combined risk pool?
Yeah.
Okay.
I mean, today we do that already. It's just the risk pools have larger breadth of risk.
Yeah.
So, you could imagine a world where, I mean, even the last few decades in life insurance, the number of underwriting classes has expanded and things have gotten more personalized.
Yeah.
But you could see as data, and people might have wearables, they've got all this data on them about their health characteristics, and in 5 years, like, you might just provide that data to your insurer and they say, for people who have like these more specific criteria, we now have a better sense of your specific risk, so we're only going to group you with people who have this more specific level of risk. So the other one I think is about the ability to move faster. So I think the market, insurance as a general rule, probably hasn't moved particularly quickly, right? You think about like how often products get repriced. So I would say that a really fast company was probably repricing their product like once a year.
Sure.
I think in the future, and this is where platforms like Montoux actually make a really big difference, is the ability to react to market much more quickly, and that actually is providing a better customer experience. The competitive pressure that we have today, if people update their prices once a year, it kind of like moves slowly to market changes, and I think that these platforms like Montoux will enable people to say, yeah, okay, like something just changed, let's get our prices updated.
Yeah, exactly. And one of the things that we're kind of talking to people about, quite a bit about at the moment is how direct to consumer is going to affect elasticities of products as well, because at the moment, which is a good thing, is price is relatively inelastic, right?
Yeah, I mean, yeah, there's definitely a lot of companies where that is the belief. I mean, there's definitely, for most of most customers would say like price is extremely important to them, and yet a lot of companies will say that it doesn't seem to be a large driver of their sales, and so I think it has to do with like where your company is positioned and stuff like that. But I agree that direct to consumer will probably bring price more forefront in the customer's mind and give them more options, right? Right now, there's an interesting challenge. I think it's not just direct to consumer; it's also underwriting. So right now, if I want to get the price for a few different companies, right, I can go get a quote, but I don't actually know what my rate is going to be, right? So I say like, I think I'm a really healthy person, so I'm going to go out and I'm going to go onto some websites and get an idea of price. There's not a lot of websites out there where you can actually get all the companies' prices, but let's pretend for a minute that you can, because there are some out there. So I go out there and I say, oh, like, Haven Life's going to be the cheapest customer for me, right? In the previous world, you had to go out to all these websites, get some quotes, then apply for whichever company you thought was going to be cheapest, and then you might get an underwriting class back that wasn't as healthy as you thought. Like, I'm really healthy, except for the fact that like something I had in my family history made me not qualify for the best class. So it's possible that another company could have been cheaper, but now I've already applied to this company. I've gone through 3 months of underwriting and blah 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 before I got this rate back. I'm not going to go now, cancel that, go apply somewhere else to get a cheaper rate. But in this new world where people are able to get under in real time, it means that I can go and say, what's my rate with you guys? What's my rate with you guys? What's my rate with you guys? Okay, I'm going to go with the cheapest one. So I think, and Haven Life is trying to move towards that world. We recently had some like publicity with the real rate thing. But I think it requires platforms like Montoux to be able to you have price elastic markets, so we need to be able to react to the markets much more quickly.
So I guess in this kind of new world that we're moving into, in some ways where technology is advancing at such a rapid speed, and it's going to change actuarial systems and processes and a whole bunch of other stuff as well.
Mm-hmm.
What do you think that means for actuaries that are kind of coming through school at the moment that are going to be going to work at large carriers, where before they may have done a whole bunch of calculations and modelling work, whereas the tools that they're using today are different? Do you think the fundamental role of an actuary might change?
Yeah, I think so. I think that's actually already changing.
Okay.
I've heard from a couple of companies where they are finding it harder to find projects for like entry-level actuaries, because there used to be a mindset, I think, where like you would give the entry-level actuaries these more like
basic tasks.
Yeah,
that's what normally happens with entry-level or graduate positions.
Right. But it was more like repetitious tasks, right?
Okay.
And as we automate some of that away, right? I mean, when you have platforms where you can kind of load data in a much easier way, and your models are built in an easier way, you don't really have that same level of like click the same thing over and over again type of task, which means that your entry level work needs to be more thought provoking, which I think is actually really good for the profession, because it means that now when we have these entry level actuaries coming in, it's not going to be this sort of like hazing ritual of like, oh, you have to go through that time where you have to like recreate that in-force file, which you spend like a day just like reformatting data from one method to another. But actually, instead, let's focus on like, how are we going to price this product for the market, or what does the customer experience matter on this product, or like really get into the weeds or actually maybe the other way. Maybe it's not getting into the weeds. Maybe it's getting into the high level view, but what actually matters, and helping make decisions.
Yeah. I mean, I certainly, that's one of the things that Class and even Ben, who works for us as well, has mentioned too, is that actuaries now, it appears, are moving much more towards that kind of strategic business insight.
Yeah.
Because and I've said this before, I think on another blog. When I came into this business, I didn't really understood what an actuary does, to be perfectly honest. It seems
most actuaries don't, so it's okay.
it seems complicated, it seems hard, but of course I don't have an advanced mathematics degree to be able to do it. So I think it's really good that people with these very significant and specific skills can actually focus on providing, not that they weren't providing real business value before, but the value that they're providing is quite a lot different.
Yeah. I think it was just funny, the comment I made before. I think it's funny when you said defining what an actuary was, because when I was an actuarial student, there's like an actuary of the future thing.
Sure.
And there was an article about like what is an actuary, and the guy who wrote it talked about like 3 or 4 definitions of like what an actuary is and how no one can really explain the profession. So I always think back to that, because I think we as an industry, or we have a profession, have a hard time defining what it is that we actually do to even to ourselves, let alone people who aren't actuaries.
Yeah, it's funny. When people ask me what I do now, and I explain to them, we provide SaaS-based actuarial software. I say, do you know what an actuary does? And a lot of people will say yes, because they've heard of the job role before.
Okay.
Like, oh, great. So what does an actuary do? And they look at me and they go, like when they ask me what do they do, and I go, I don't know, man. They're all wizards to me.
Yes, we actually go to Hogwarts. That's
well, look, thanks, Matt.
Yeah.
Appreciate your time.
Thank you.
As always. And thanks everyone for joining another episode of The Good Life.